let's walk through some examples using a periodic inventory system. So again, remember, it's periodic, so every time that we have something to do with inventory, we don't necessarily update it. We're just going to do it periodically. All right, so we're going to wait until the end of the accounting period. We're going to take a physical count of what we have left over. Okay, now, if you know ending inventory, you can always tell me how much you sold. Or if for some reason you know the amount that you sold, you could tell me what you should have in ending inventory. Either way, you should still take a physical count, though, to verify what you actually have in inventory. So here's the data that we've been given. Okay, these are some transactions that we've had with inventory. We had our beginning balance. We had 100 to start with at $20 a piece was the unit cost to us, so it was $2,000. We had a purchase on May the 2nd of 50 units at $22 a piece, and on October the 15th we bought 150 units at $25 a piece. All right, so in total, if we add all the quantity up, we had a total of 300 units throughout the period. So you can consider that your goods available for sale. It's what we could have sold over the entire year. And the total cost here is $68.50. Whew, bad handwriting today. Sorry, guys. All right, and let's say that we went and took a physical count. And so we know that we have ending inventory equal to 120 units. So I want to know what the cost should be for those 120 units on our balance sheet. We're a perpetual system, okay, again, so we're doing this periodically, and let's assume that we're going to do this under Fifo. Let's work a Fifo example first, okay? So we're running Fifo, first in, first out, and remember, that's the order in which they are sold. But I have ending inventory figures here, so I know what's left over. Well, what order would they have been sold? First in would have been the first out. So we would have started with the top level. That January 1st level would have been the first things we sold. And we would have worked our way down. Well, if that's the order we sell, what's left over? This 120 units. I want to know what it's made up of. Well, it would be the most recent purchases. So that 120 units under FIFO would have to be all out of that last level, that October 15th level. So all 120 units, all 120 units would be at a cost of $25 a piece. In other words, on the balance sheet, you should expect to see $3,000 in ending inventory. Now, if that's a little confusing, I can prove it to you another way. It's a little bit more lengthy, but we can do it. If we have 120 units in inventory at the end, how many did we sell? Well, we have 300 we could have sold. If we didn't sell 120, we must have sold 180. So let's look at cost of goods sold. This figure that we just got, our $3,000. This is your ending inventory. Now let's look at cost of goods sold. Go at it from the other perspective. Make sure that we understand what's going on. So we would have sold 180 units. All right, let's go back to the top and look at our data. Under, again, FIFO, you're talking about selling the first in, first out. So if we're looking at sales data, we'd start at the beginning with that 100 units at $20, right? So that's where we'd start. 100 units at $20, which is equal to $2,000 total, would have been the first piece. But we sold a total of 180, so I can't stop there. All right, the next level that we would have gone to is the 50 at 22. So let's write that down. 50, 22, which is equal to that $1,100. But again, I don't have 180 yet, and we sold 180. I've got to count for them. So we've got one more level to choose from, the 150. But I only need 30 to get to the 180. So we would have 30 units at the $25 mark. And that's going to be a total of $750. So if I add that up, that gives me $38.50. Well, I know that my total cost here is $68.50 for everything I could have sold. If I know that I sold $38.50, then I must have $3,000 left over. You can do the same thing if you found any inventory first, like we found the $3,000 first. You could take the $68.50 and subtract the $3,000 in ending inventory, and that would give you cost of goods sold. So this is cost of goods sold, and this is cost of goods sold, but this is ending inventory. Okay? All right, let's use the same data. Go back up to the top, but now let's run this under Lifo. And if I'm moving a little fast, I'm just trying to keep it concise. Go back and rewatch some of this again to make sure you're understanding these pieces, because I'm showing you a lot of ways to get some of the same data, because everything doesn't make sense to somebody the same as another person. So one way may make sense to you, another may make sense to someone else a lot better. Okay, so I cleared that out. Still, though, assume that we've got that ending inventory of 120 units. All right, but let's work it under Lifo this time. So last in was the first out. And again, that's always the order in which things are sold. So if I had 120 units left over or in ending inventory, the last ones in would have been the first ones out. So they would have been the first ones sold. So they wouldn't be there anymore. The ones that would be left over are the ones that are the oldest. So we'd start at that January 1st level. So if we had 120, then 100 of those would be at a cost of $20. So we got $2,000 here. And we need 20 more. So 20 would be at the cost of $22 a piece, or $4.40. So together you've got $24.40. That's your total ending inventory. That should show up on your balance sheet. All right, again, you can double check this, or if I just asked you for cost of goods sold right off the bat, we know that cost of goods available for sale was $68.50. If I subtract my ending inventory figure, then you can tell me that cost of goods sold should be $44.10. Now, I can prove that as well. Let's run through the numbers. We have 180 units in cost of goods sold, and this is LIFO. Last in, first out. That's order of sales, and that's what we're doing now with cost of goods sold. So we'd start at the bottom, or the last purchases, the most recent purchases that were made. So we'd start with the 150. So we'd have 150 units at $25, which is $37.50. All right, and then the next level is 50 at 22. Well, we have a total of 180, so I only need 30 of those. So we're going to have 30 at 22, and that's a total of 660. So if we add that up, it equals, lo and behold, $44.10. Again, you can double check your inventory too. If you had $68.50 available for sale and you know you sold $44.10, that was cost of goods sold, then you should be able to find out that $24.40 should be the ending inventory. And if you look up above, that's what we calculated for ending inventory. So there's several ways to check this and to calculate it. Okay, this is LIFO. Again, remember the name of it tells you the order in which it is sold. Right, we got one more to look at. Let's look at the average method. All right, the average is going to be in between LIFO and FIFO, because it takes the average of all the costs. So we need to get an average cost for our total inventory. Again, remember this was 300 and this was 68.50. So to get an average, I need to take the total dollars associated with all of the inventory that we had this year, divide it by the total units that cost is associated with. And that'll give me an average cost per unit. So this comes up to a very messy figure. It's 22.8 with a lot of threes behind it. So I'm just going to put a couple of them for rounding purposes. Okay? So now if I want to know ending inventory, or if I want to know cost of goods sold, I'm just going to take this average and multiply it by those applicable units. So if I wanted to know ending inventory, we know that that was 120 units. And now that would be at a cost of $22.83333, couple threes in there. And when you round it to an even figure, you should get $27.40. Now again, I could easily take that $68.50 and subtract the $27.40 and give you cost of goods sold. But we can also prove it by using the units. Cost of goods sold, 180 units at 22.83333. And when you round, you should find that you get a total of $41.10 for cost of goods sold. Again, you can double check both of these figures. If you take $68.50 and subtract $41.10, you should get $27.40, which was the ending inventory. And if you take the $68.50 and subtract your ending inventory of $27.40, you should get cost of goods sold, which is $41.10. Because there's only two things that can happen with that $68.50. That represents everything we had available for us. We can either sell it or keep it. So they should always add together to equal that total.